welcome to Virtual Investor Conferences. My name is Scott Powell, President and Chief Executive Officer of Skyline Corporate Communications Group, LLC. On behalf of OTC Markets and Skyline Corporate Communications Group, we are very pleased to have you join us for the Small Cap Growth Conference today. The next presentation is from Abingdon Health, PLC. Please note that you may submit questions for the presenter at any time. You may also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome Dr. Chris Hand, Executive Chairman, and Mr. Tom Hayes, Chief Financial Officer of Abingdon Health, PLC, which trades on the OTCQB venture market under the ticker symbol ABDXF and on the LSE under ticker symbol ABDX. Welcome, Chris and Tom.
Thank you.
Thank you, Scott. Thank you, Scott. And welcome everyone to this presentation on Abingdon Health. We're a medical diagnostics medtech company. We'll give you an overview of our activities and our specialization in lateral flow testing. First of all, we have a disclaimer on forward-looking statements as usual. So please just view that for a moment before we move on. So as an introduction, my name's Chris Hand. I'm one of the founders of Abingdon Health. Founded the company with my colleague Chris Yates, who is now president of our USA activities, which we started a year ago, April last year. We'll give you more information on that activity in Madison, Wisconsin, as we go through the presentation. My background's in medical diagnostic testing. Prior to founding Abingdon Health, I founded, built and sold another rapid testing company called Cozart, which we sold to another AIM-listed company in London, and via various other acquisitions, that's now part of Abbott. That was a drugs of abuse testing company specializing in rapid testing for drugs. So my background is technical, the development and commercialization of rapid diagnostic tests. As I say, I'm joined by my colleague Tom, who will introduce himself.
Thanks, Chris. So, hi everyone, I'm Tom Hayes. I'm the CFO at Abingdon Health. I joined the business circa 18 months ago, and my background's chartered accountancy. Prior to joining Abingdon, I was the finance director at another UK stock exchange listed business for roughly 10 years.
So I've mentioned that we're a med tech company. We're a contract development and manufacturing organization based in Madison, Wisconsin, and headquartered in York in the UK, with additional laboratories south of York in Doncaster. Lateral flow is our core technology, and that extends to many different test parameters, which you can see on this summary slide here. The lateral flow technique has been known for many years. I've been in the field for 25 or more years, testing, as I said earlier, for drugs of abuse and other markers. Pre-COVID pandemic, lateral flow testing was most widely known as a pregnancy test, but what the pandemic years did for the technology is effectively create greater awareness and user acceptance of lateral flow as a alternative to laboratory testing. So lateral flow gives the rapid on-site testing that pretty much everyone in the developed world is now familiar with. You can see in the bottom left of this slide the very many different areas that lateral flow or rapid testing can be applied to, everything from infectious diseases through to testing for shock, stroke, monitoring for fertility. So it's a very wide-ranging technique, and we're active in all these different areas, contract developing and manufacturing the products for our customer base. We'll give you various case studies throughout the presentation. The first one, which is a really interesting application of lateral flow from one of our customers called Upfront Diagnostics. We've been working with Upfront to help them develop and now manufacture a test for them for differentiating the different types of stroke. So the most problematic stroke is one called large vessel occlusion. What Upfront's test does is determine whether a patient has had this particular type of stroke. But importantly, the testing can be done on site and in an ambulance, for example, so that the paramedics are able to let the hospital or specialist stroke centre know before they arrive that the patient on the way is in need of specialist care for a LVO stroke. So that test is approved, it's in use. It's currently being trialled by the London Ambulance Service across North London, and it's a really great example of how lateral flow testing can improve the patient's pathway and improve, hopefully, the outcome for that patient. So what we do and who we are, I've already started talking about that we're a CDMO for lateral flow, but also increasingly for other medtech areas. Our mission is fast-tracking diagnostics and devices to improve lives. We've been founded since 2008, and we're headquartered in York in the UK. We've got additional performance evaluation laboratories in Doncaster in the UK, and since a year ago, we now have US headquarters in Madison, Wisconsin. We offer a full regulatory quality and analytical services provision to our customer base across diagnostics, but also other medtech and devices. And you can see at the top of this slide here, we offer this one-stop shop from design through to development, manufacturing, regulatory work and delivery into the market. Importantly, that regulatory aspect of what we do starts right at the beginning of the process. And we've got 40 regulatory experts within the company. So of our 125 employees globally, 40 of those are regulatory experts. So we can very much offer this one-stop shop to our customer base. And you can see in the picture there, the 3 sites we operate from. York is on the biotech campus, is our headquarters, University Research Park in Madison, and the analytical labs in Doncaster.
Okay, so moving on to some numbers. This slide is a summary of our most recent financial results. So our financial year ends 30th of June. So these numbers are for the first half of the financial year ended December 2025. And what it shows really is that we delivered significant revenue growth in the period. We were up 45% compared to the prior period. We were loss-making in the period, which was expected, and that was a combination of investments in overheads with a view to future revenue growth. And then also it just shows that our cash balance at the end of December was 3.7 million. And if we move on to the next slide, there's just a little bit more in there on the cash side. So the left-hand side here is really a recap of H1. On the right-hand side, it just summarizes that we did a fundraise in October last year, which raised £3.2 million net of expenses. And that was for two main reasons. The first one was for working capital purposes to support executing some of the bigger contracts that we've been winning. And it was also to expand our US operations, which we'll talk about in a bit more detail later in the presentation. And the final point is just noting that the second half of the financial year, we're expecting significantly higher revenues and for EBITDA and cash flow to be positive in the period. Thanks. And then this third slide is really just showing zooming out and showing more of a long-term view, where we've been and hopefully where we're headed. So it covers for the last 4 financial years results through to June 25, and we've also included our brokers forecast for the current financial year. So it shows that we've had an average revenue growth rate of 40% year on year through to June 25. It shows the brokers' estimates for the current financial year are 12.2 million. And it also splits the revenue down by the different service lines that we offer, which are contract development, regulatory work, and also some contract manufacturing and product sales. The final point on this slide just to note is that we did make 2 acquisitions during FY25 in the regulatory space. They were 2 consultancy businesses which we were already working with and complement our existing offering very well. and they were acquired during 2024, and they're making a positive contribution.
So as we've been saying, our core technology is lateral flow. That technique is evolving very rapidly, and COVID really led some of that evolution. Lateral flow testing is no longer a simple yes-no device for a single biomarker, but can be applied to very powerful and flexible activities in diagnostics. So we can test for multiple biomarkers at the same time, so multiplexed capabilities we call it. Importantly, we can quantify the result, so we're no longer saying yes, no, but we can say what amount of a particular substance is in the blood, saliva or urine, whatever sort of sample we're measuring. So we can quantify with the use of a small reader or a smartphone app, for example, which we have of our own. We have a patented smartphone app software. Multiple sample matrices, I've just mentioned saliva, urine, blood. So any sample which can be made liquid, basically, you can apply onto a lateral flow device. And there are many different chemistry formats which are listed on here, including different particles to give the signal. So those of you that have used a lateral flow device, which is pretty much most people will have used tests which give either a pink or a blue color. The pink's gold, the blue is not generally a latex test. So it's a very powerful technique, as we've said, and it's evolving to really create tests which can give rapid on-site tests with similar performance to a lab test. So it is evolving very well from a technique point of view. And just to illustrate the complexity of what we're making, what our scientists do in York, Doncaster and Madison is to apply their biochemical and engineering skills to make the test very easy to use for the end user. So all the end user has to do is add a sample and potentially some solution to make things flow. But in amongst all that, if you were to take a lateral flow test apart, you wouldn't see this obviously because these are all biochemicals bound to the membrane, but it's a very complex biochemical system, and this is a diagrammatic representation of a test we made for multiple myeloma, the blood cancer, where we're measuring two different parameters in blood together with a third line, which acts as a control to show the test has worked properly. So the theme being, it's a very complex technique, but what we do and what we offer to our customers is making all that work as it should, and from start to finish, make things work through regulatory approval through to sale to the end user customer. The market's big for lateral flow testing. It's even larger for medtech. So I've mentioned that and Tom has mentioned, we acquired two regulatory companies, which gives us access to adjacent medtech markets. The medtech market is generally about 8 times larger than this lateral flow market we have illustrated on this slide, which is going from $8.5 billion in 2024 to $26 billion approximately in 2035. And that's split across human diagnostics, clinical testing, veterinary diagnostics. So it's a very wide-ranging technique, as we've been saying. But one initiative we're looking at as a company is to try and improve the sustainability of what we're making. So there are 20,000 tons of plastic produced annually from the lateral flow industry. What we're doing, what we've illustrated here as prototypes, is switching that plastic for seaweed-based eco-housing. So rather than having to put the diagnostic test in landfill, these seaweed-based housings, which can be made by standard injection molded techniques like we do with plastic, they will dissolve. They're compostable, so they won't create long-term waste like the plastic does. And we're just introducing these to our customer base, which gives us a differentiator, I think, from the standard lateral flow test. So it's another tool in the armory from our customer base, our CDMO customers. So we're obviously on OTCQB now. One of the stimulus is for that was our establishment of US operations in Madison, Wisconsin, which we did in April last year, 2025. You can see a picture here of the the outside of our facilities, where we've got development labs and a commercial office on the research park of the University of Wisconsin at Madison. We're just adding manufacturing labs to this site, really from the pull and customer demand from our US-based customers. It gives us access to our US clients, but importantly, there's a requirement for made in the USA and also obviously developed in the USA, which we can now offer to our customer base. We had many customers before we set up in Madison. Those customers are now becoming larger and bringing more work to our facility now that we can offer this US site. So we raised some money on AIM on the London Stock Exchange in Q4 of calendar last year. We raised £3.2 million net to partially expand, or rather pay for that expansion in Madison, which is now underway, and those manufacturing labs are currently being built and due to be fully operational by the summer of this year. So following the opening of the facility in Madison a year ago, we've started to win larger contracts for us as a small company. Tom has mentioned earlier the forecast of our analysts is for revenue of the order of £12 million sterling to the end of June this year. What's happening now with our expansion and the full service offering we can bring to our customer base is the contracts we're winning are larger. So that some of them are US based, as you can see on this slide here. Some are based from UK and Europe, but the key thing is they're all the one-stop shop full service offering contracts, which are larger and also have a longer time period, which gives us greater visibility on revenue going forward. So some of the examples on here, we've got a $2.5 million contract for the development of a companion diagnostic test for a US-based customer. We have another $2 million contract we announced in November 25 for a multiplex diagnostic test, so the type of test where we're measuring multiple parameters at the same time. And the largest contract we have illustrated here is one for £4.8 million sterling, so of the order of $6.5 million for a multiplex testing program across many different parameters, and other ones you can see on the slide here, such as the $2.5 million. So the key theme here is we're no longer a lateral flow development company, although that's still our core technology, but are a one-stop shop for pharmaceuticals and biotech companies to bring this full service offering from regulatory pathway creation through to development, manufacture, regulatory approval and sale. And since April this year, so a year after we opened in Madison, we took the decision to allow easier access to our AIM-listed London Stock Exchange shares for our US following, people that are interested in Abingdon in the United States. So since April the 21st, the shares have been available via the OTCQB platform, which is we think that's a great move for us, and it should hopefully increase the liquidity of our shares for all our current shareholders and new ones. The USA is the world's largest lateral flow and medtech market, so it makes sense for us not only to be here physically, which we are obviously in Madison now, but also to allow our shares to be traded in dollars and in US market hours, which they can now be. For us as a London company, our regulatory burden is minimal in that we're obviously regulated in London, and so we can now move to OTCQB with minimal additional regulatory activity. And just a couple of more slides to illustrate the wide use of lateral flow, particularly companion diagnostics. I think is very important because it shows the move from the simple yes/no test to the ability to operate alongside a pharmaceutical. There's a lot of regulatory and validation requirements required for this sort of test, which again we offer as part of this one-stop shop. There's a collaborative development approach for our customers because we need to develop the diagnostic test alongside the pharmaceutical, and that's what we do from our Doncaster site and via an increasing clinical research activity that we offer to the customer base. And that goes across many different applications, from oncology through to cardiac disease, neurology, infectious disease, and also inflammation and autoimmunity. So pretty much anything you can test by this sort of immunodiagnostic test or lateral flow test, where we can apply to as a companion diagnostic. As I've said, importantly, we run this program alongside the development of the pharmaceutical, and we're doing this at the moment for various biotech and pharmaceutical companies. One we can name is a German company called 144, where we're developing a test for them for their pharmaceutical, which treats cardiac shock. And importantly, the diagnostic test needs to be developed at the same time as the pharmaceutical, because that then allows the regulatory approval of the therapy. So 144, I just mentioned, they're a good example of this companion diagnostic testing. Their test for cardiac shock is in process, as is the lateral flow test. Another few examples of the wide use of lateral flow and where we're actively working. There's a test we're developing for malaria in collaboration with some large prestigious entities such as the Institut Pasteur in Paris, and FIND and the London School of Hygiene and Tropical Medicine. That's a test which has got, I've talked about multiplex testing. It's got 4 different tests in the same device, and it determines what sort of malaria a patient may have and therefore how they're treated. And then 2 other examples, Caras Animal Health, we've developed and are manufacturing a test for them for use with companion animals. It's a test for calprotectin in feces. And then Spark shows how the technology continues to evolve, and we've been working with them to help prove a novel binding method and to improve the performance of lateral flow tests generally. So to summarize, lateral flow is very powerful and flexible. The full service offering across all that I've been describing is resonating well with our customer base, and that's illustrated via recent contract wins of £4.8 million, another one of $2.5 million announced in March. The USA manufacturing is underway in Madison, Wisconsin. You can see a snapshot of our York laboratory on the left there. And we complement this lateral flow development by a complete in vitro diagnostics and medtech regulatory capability. The OTC platform hopefully gives access to those based in the USA that have an interest and are following our company. And in summary, we're a one-stop shop and turnkey solution for our customer base, from design through to development, manufacture, regulatory approval, delivery into the market, and even being the legal manufacturer if that's what our customer requires. So that's an overview of Abingdon. Thank you for joining. We're happy to answer any questions, and I can see we've got some already. So we'll have a look through those and see if we can what we can answer. So there's a question about analysts are flagging Abingdon approaching break-even profitability with high growth. There's a question about what's most misunderstood about the market, about the scale of the opportunity. I think if I start answering that, Tom, the scale of the opportunity is very large. I mean, you saw on one of the earlier slides that I noted that the lateral flow market alone was $8.5 billion in 2024 and growing rapidly to almost 3 times that by 2035. I think what we've hopefully been describing is we're no longer simply a lateral flow company, but we're a full service offering to our customer base. So therefore, the market opportunity is larger than that. Well, obviously, 8 or 24 billion is also a very massive market anyway. But we've got our market is widening into the full service offering, but also into the adjacent medtech markets I've been describing via the acquisitions we did of 2 regulatory medtech companies back in 2024. So I think hopefully what we're making clear to our current investors and future investors is we've got a much greater offering to our client base now, including pharmaceutical companies, and that's working by them coming to us as clients. There's a question about competitors in the USA. Like most companies, I think obviously we do have competitors which are developers of lateral flow tests or are regulatory approval providers of medtech and IVD. I think where we differentiate from our competitors is this one-stop shop. So the reason we're winning the contracts that I've just been describing is because the client wants us to take care of things for them. We've got the skilled people across regulatory through to biochemistry and engineering, etc. So the customer doesn't have to shop around for all the different pieces of the jigsaw. We can basically provide that to them. And I think there's another question about that. Why are customers choosing us? I think that's the reason, because we can do everything for them without this need for shopping around for the different components. And then there's always tension between the different components if it's not done via one solid program management, which program management is the key to what we're offering, I think. Yeah, there's a question about are the recent wins with US customers specifically, are they with strategically important names that we can use as references? One of the issues we have as a company working with the pharmaceutical industry or biotech is generally that there's a lot of confidentiality involved. So we announce the names, that we announce contracts when we win them, because obviously that's material and important for our shareholders to know. Generally, we can't name the customers immediately, but as and when we can, in collaboration with our clients, we will name them. So the case studies I've just mentioned are mentioned with the permission of our clients, such as 14.4 and Upfront. So it is a thing we need to do, but yes, it's something that we do try to do as and when we can. And just looking if we can, I'm conscious that we're running short of time, but we'll try and answer as many more questions as we can. There's questions about moving towards profitability, and I think, as Tom said, our analysts are forecasting increased revenue in H2, and moving towards cash flow positive position and profitability throughout H2, and that's our key objective, is to do that and to continue that into the next financial year starting in July.
Yeah, Chris, I might just add, in terms of the question about the key building blocks for that. I mean, it's really driven by revenue growth. I guess what gives us confidence in the revenue growth is that we've announced a number of significant new programs over the last 12 months. And as those programs kick in and progress, then yeah, that should support the revenue growth.
Yes, and I think the final question we can answer is one about where do we see, as our volumes ramp up, which they are, whether that's development volumes or manufacturing volumes or indeed regulatory volumes, where do we see the biggest operating leverage? And I think it's really across all those areas. We've built a very strong management team and facilities in Abingdon, now increasingly in the UK, and as we've been talking about today, in the USA. We don't need to add a lot more capacity in terms of equipment, facilities, or people at high level people to that. So I think, yeah, we'll start to see that operating leverage coming through as our revenue continues to step up into the next financial year. So I think hopefully we've answered all the questions that have been asked of us. Thank you all for joining the meeting. And yeah, we'd be we're keen to continue to engage with you. So thanks for attending today.